G'day there, my name is Ben Everingham and I'm the director here at Pumped on Property, and in today's video I'm going to talk about how to set your property investment goals. So how to actually create a strategy that works for you in the short term and long term, with the intention of obviously replacing your current annual salary and achieving full financial independence so that you have the choices and time to do the things that are meaningful for you. So welcome if it's your first time to my channel, or welcome back if you're here again. I share about 3 of these videos each week and would love you to subscribe to the channel if it's something that you're interested in. We also have a great newsletter over at our website www.pumpedonproperty.com, where I share really decent weekly and fortnightly email updates on stuff that's interesting to me as an investor that has bought over $150 million worth of property for myself and my clients over the last 8 years. So we're going to talk about 6 things today. I've just put 5 hands up. For those of you that are here, I'm always doing that again. Sorry about that. But we're going to talk about where you are right now, where you want to be in the future, what's actually holding you back from achieving that, as well as identifying what you want to buy and how to do that. We're going to talk about linking your next step to your longer term goals, which a lot of people have an issue with, connecting the property that they want to buy this year to where they want to be 15 years from now, and then, making it happen. So let's talk about a little bit about identifying where you are right now. And this is the very first step in setting your own property investment goal or goals. Now, identifying where you are right now is as simple as looking at your current annual salary. If you're in a relationship or you're married, obviously, that as well, like your combined annual income, looking at your savings position or your equity position, looking at the debt on your own home if you own something, as well as the value of that home, and if there's an equity gap there, realizing that that might be a good opportunity to borrow some of that money and to use that for a deposit for your next investment or your first investment. If you're just getting started, it's obviously very simple. It's looking at your savings position or talking to someone who can help you guarantor the property. Maybe your mum and dad have a huge amount of equity in their own home, or they own it outright, and they're prepared to, help you get started by guarantoring for you. But identifying where you are. So basically, we're talking financially here right now, and then taking that information, once you've got an idea of, also what your costs are on a weekly basis and what your income is. Hopefully you've got a savings plan on top of that is working for you and you're moving in the right direction. If not, try and create a weekly budget that's realistic, that still involves you having an epic life and doing the things that you want to do, because investing in property doesn't mean sacrificing everything. You should be able to still maintain a good quality of life and do the things that are meaningful for you to keep you inspired and moving forward. But, really sitting there and creating that budget. And then once you're in a position where you kind of understand where you are, going and talking to a mortgage broker or your bank and saying, hey, this is where I am right now. Based on where I am, do you think I could borrow some money? How much money could I borrow, and what rental return will I need to actually make sure that this stacks up for you? And the bank might say to you, look, or the mortgage broker might say, look, you can't borrow anything right now. If they do say, well, what do I need to do to borrow money in the future? And they'll give you your next steps. Alternatively, you might be in a strong position and they might say, yep, you can borrow some money out of your own home, or you've got enough cash savings to buy now, and you can effectively ask them about what you can borrow and start to get a pre-approval in place that will really, give you that confidence to know that, yes, I can borrow this amount of money. That means, I've got this amount of money to play with, $400,000, $1 million to go buy an investment property. Now, after you've identified where you are, the second step is identifying where you want to be in the future. And this is hard for people. Like, I probably talk to 600 plus investors a year. We help 8 of those. We take on 8 new clients a month. In the past, we've taken 15 to 20 clients on a month, but now we've just sort of reduced it back. And from talking to those 600 investors a year, a lot of them have an issue identifying where they really want to be in the future. And if they do have an idea of where they want to be, it's not realistic generally, and it's not based on understanding what they're going to have to do to get there. So I think a good place to start is if you've got $100,000 a year income, just as a round number, then 15 to 20 years from now, you should have replaced that through passive income from your property portfolio. You might have shares or businesses or super on top of that, but this is just the property side. So in terms of identifying where you want to be, it's really going, you know, I'm 40 years of age now. By the age of 55, I want to own my own home outright, and I want to own a couple of properties that give me $80,000 to $100,000 a year of passive income. So generally, you know, look to replace your wage. If your wage is $200,000 or $300,000, unless you're prepared to take on huge amounts of risk and debt, you know, maybe limit that. But if you were to produce $100,000 worth of income within 15 years, it might take a lot of that pressure that you'd be currently feeling. I've been paid big money before, but it also came with big responsibility, anxiety and pressure. And that was, you know, okay because I knew what my goal was, but not sustainable long term. So it might mean that you can replace 100 of your 200 grand through property, cut back to 2 days a week as a contractor and live your life on your own terms, or go do what you really want to do. So for me personally, at 24 years of age, I bought my first 2 properties. I also set a goal that I wanted to replace my annual salary. My goal has increased a little bit more now as my income's grown, obviously, as I've gotten older, but that is still the goal that I'm working towards, to replace a couple $100,000 per annum of passive income just through the properties I own, and then you've got your businesses and your other stuff on top of that. So, you know, 15 years is probably realistic if you're one of those, you know, 5 to 10 year people, but you don't own property right now. It's probably unrealistic without going completely crazy or taking on huge amounts of risk and debt. But identifying where you want to be personally and what your life might look like as well as financially is really important to setting your property investment goals up. The third thing is identifying what's holding you back. Now, this is a question we generally don't ask ourselves, like, what is actually holding you back and what is stopping you? And the answer to that question is always yourself. And that's a brutal thing to say, because I know that what's stopping me from achieving things is myself. But by taking personal responsibility for our challenges, we can start to overcome them, identifying what they are. Now, the most common challenges I face personally is self-sabotage, of being either too successful or not successful enough. That's something that I deal with. Information overload, definitely, because there's so many different sources of information online and conflicting ideas of how to get the same result. That's always been a tough one for me. Limited time, because I have 3 children, a wife, businesses, properties, and I obviously still want to train and see friends and go on holidays and do all that fun stuff. You know, not having a mentor or a coach was a big one for a long time for me, as well as having a limited social support and not really having people I could just catch up with and go, hey, this is where I'm at, and them having the knowledge and skills to be able to go, that sounds good, but if you tweak this, you could be here a little bit faster, or, you know, people that have been there and gone to where you want to be. So there's some of the biggies for me. And then sometimes just honestly, like a lack of confidence. I just personally don't like risk. You know, I do read stuff, and people, you know, I've read a lot more stuff now and understand things a lot better, but, you know, I used to have fear and lack of confidence around timing the cycle. Now I've learned how to understand that better from an Australian and a global perspective. I feel a lot better about that, but we all have things holding us back. And we need to recognize that things do hold us all back. Like, I've bought 10 properties in the last 8 years with my wife. Every time I buy a property, I almost have a panic attack. Like, still, I've bought 400 plus properties for my clients worth over $150 million, and I still take every single purchase like it's life or death, because we're talking big money and we're talking about people's futures. And if you can't see how what you currently have is going to get you there, then you either have to, you know, pivot and make a change, or you have to just get comfortable that you're going to end up on the pension, because that's the harsh reality of not taking action and working through the challenges. The fourth thing is identifying what you want to buy, and that's so easy to do once you understand where you are, what you can afford, where you want to be in the future, and what's holding you back. Now, property is very simple, and I've talked about this in other videos. if you're just going to buy one property for the rest of your life, make sure it's a house and make sure it's in a metro market and a capital city. 75% of the population and job growth in the next 20 years in Australia is going to occur in Sydney, Melbourne and southeast Queensland. So why roll the dice on a crappy regional market unless you want to live there for lifestyle? And a crappy regional market, I just mean in terms of performance. I live on the Sunshine Coast. It's the most beautiful place in the world to live. There's some, good gains to be had up here, but I know by buying up here, I'm sacrificing, probably 2% long term from buying in Brisbane, Sydney or Melbourne in terms of growth per annum. So I'm aware of that as well, and I have to be comfortable with that too when I do decide to buy in regional areas like this. It's not about short-term returns. It's not about how much equity you make in 3 years. It's where you are in 15 to 20 years that really matters. And, riding short-term hotspots and all that rubbish that the spruikers talk about means absolutely nothing to actually sophisticated investors that understand long-term, low-risk quality properties is what it's all about. So, if you've got a budget of 400k, buy a house 20k's from Brisbane CBD on the train line, close to university, close to schools, close to the beach. Don't roll the dice, just buy quality, safe stuff. And if you don't feel comfortable of investing outside of your area, and that area is in the right time of the cycle and it's a quality market, then do your due diligence and make sure you find a suburb that has outperformed the market averages in the last 10 years and the last 20 years so that you've got the confidence to take that step forward. So the fifth thing is linking your next step to your long-term goals, and that's what I personally obsess about, my next step. I obsess about what I'm doing next, and I obsess about how that's linking me to where I want to be in 15, 20, 30 years from today. So, it's important to think long-term. So many of us are caught up on this, what's immediately in front of us thing, and that's cool. That's all I actually think about. But I also need this, this is me in the future and this is where I'm going to be if I do this now. So, linking your next steps is as simple as going, I want to be financially free in 15 years. I might own no properties, I might own my own home plus a couple of investments. If I do nothing else, where am I going to be? If I take calculated strategic action, which a smart person can help you create, or a friend might be able to help you create, or you might be able to sit down and create yourself. If you're analytical like I am, spreadsheets are king, and forecasting the future based on very, very conservative numbers can be like a really nice exercise to just see where you're going to be. But linking your next step to the longer term is important to make sure what you do now enables you to get to where you want to be when you want to be there, and anything else just isn't good enough. There's plenty of properties in the market that are rubbish that anyone can buy, but finding a quality property that's going to grow by the 4.8% a year that you need for it to double in value in 15 years is important. Finding a property that doesn't cost you anything to hold week to week is very important, because who wants to sacrifice their lifestyle for the next 15 years while we wait to get to where we want to be financially? We want to live for today and make sure we do what we want to do now, just in case 15 years never comes. The sixth and last thing I wanted to talk about, and this is where most people fail. We know the numbers on how many Australians own one property versus how many own 4 or 6. It's not about how many you own. It's about, if you can own one property that's going to give you 100k per year in passive income in 15 years, just do one property. If you, want to own a couple of smaller properties that give you 50 grand each per year in 15 years from today, then just own 2 properties. Like, whatever you feel comfortable, only you can decide how much risk and debt and leverage you're going to use to achieve your goals and how long you want it to take. But the sixth thing is just making it happen. And we do a lot of talking, and we do a lot of over-analysing, and we do a lot of information gathering, and we freak out and go through these constant cycles of, I need more of this or more of that to be confident. You don't. You just need a very, very clear strategy that links where you are to where you want to be. And then you need the confidence and the market knowledge to go and execute on it. And you can go and execute it on your own, or you can outsource that and you can get someone else who does it every single day, or that's already in the financial position that you want to be in, to help you make that happen and hold your hand through the journey. So I hope this video has added some value in terms of how to set your own property investment goals. It's as simple as identifying where you are, where you want to be, what's been holding you back, and what your immediate next property investment step is. And you know, if nothing else, target houses in metro markets. You don't have to spend as much as you can borrow. You don't have to put your house on the line or all of your equity on the line. You don't have to put your whole savings on the line. It's important to keep buffers in place. It's very important to take a low risk approach to investing and to not go absolutely insane and put yourself in a problem situation in the future, which so many people do or will do. It's not about thinking that just because you've made some great money by timing the Sydney or Melbourne markets in the last 5 or 6 years, that you're going to get back into any other market and it's going to immediately turn to gold. I work with so many clients that when we were buying in Sydney a bunch of years ago, were, you know, buying in other markets as well and going, well, Melbourne this year performed by 12% and Sydney only did 10%, and I'm like, it's not about what happens on an annual basis or even over 5 years, it's about the long-term trend. And we know that if we look at the history, that Sydney, Melbourne and Brisbane in the last 20 years have all grown by over 8.5% a year. If we look at them year by year for the last 46 years and analyse the data, they've grown on average by over 9.5% per annum. And if we look at the last 10 years, Sydney and Melbourne have killed it and Brisbane sat very flat. But if you look at your data and know your history, you would also know between the last 6 years ago, before Sydney started to crank, it's 2018 talking about this now, Sydney was flat for 9 years straight and did an average return of 1% per year. Obviously some suburbs did their 10% a year, some suburbs did nothing, some suburbs did their 5%, but you know, averages are important to understand, not to use them to apply, but just to know that, you know, things aren't going to be as good in the future as they were in the past. But things are going to be good in the future. We've got the most amazing neighbours in the world that have unstable economies with problems that need to invest somewhere safe. We've got a government that loves bringing new people into the country with a goal of 50 million people in 25 years. We've got strong population growth. We've got good employment. We've got stable governments. We've got banks that are hopefully, after the inquiry or inquest that's occurring at the moment, are going to be more stable as well. We've got a good time in the cycle right now. You know, might be closer to the mid-cycle slowdown, but we're still a long way from the very, very top land plus-led recession that generally starts in the US and smashes the rest of the world. So, you know, invest with confidence, learn to identify where you are, set realistic goals, and get on with making it happen. So for those of you interested in learning more or having a conversation with me or my brother Simon, please book a one-on-one strategy session by going over to www.pumpedonproperty.com. I'd love to talk to you in a lot more detail about this, and actually, you know, I'm not a financial advisor, but just listen to where you are and share some ideas that have worked for me personally. And, you know, begin that journey with you if it's something that you're looking to outsource. And if not, because we only do take on 8 clients per month, then, you know, just give you some skills to actually be able to go and execute this with confidence yourself as well, because property is super simple and we're the ones overcomplicating it. So thank you for your time and for your attention, and have a great day.